Okay, this is yet another backtest talk through. Um, so the market from the previous day opened with a large gap up. The previous day high, previous day low are both somewhere down below. While the market opened with an overbought candle, it was a bearish candle. So this is what was the point of interest. The way that we have defined the process for breakout level, and OB bar kind of confirms the low, but an open bar which is bearish confirms the high. So this is both, which is why this is a interesting case. So for better or for worse, we define the breakdown level somewhere here, and we let the market play out. So it doesn't close, but it is pretty close to the low here. This also means that because now we have two bearish bars, our confidence on this being the breakout level for day high becomes stronger. It then continues. It doesn't close, but it now comes up and creates a bullish bar. We don't do anything because there is no close and we do not have even a higher high higher low structure, so we continue with this breakdown low level. And now we have first time where the market kind of went ahead and closed. Now what we have been observing around the way that the market behaves, before it took out the low of the day, there was literally no pullback. So it gives us some confidence that this breakout may in fact be a valid one. So we add our buffer, we plan for our entry below this. What we are yet to test eventually in backtest is that if this breakout happens with a lot of pullback and a lot of complex structure, then what is our best approach for entry? We haven't been able to figure that out or crystallize that as much. Here we still continue with this one. Market makes an inside bar, no particular movement. Another inside bar, no particular movement. So at this point of time, what I've seen the way the thinking is in live market is that if the market had to go low, ideally it should travel from our point, and we should ideally be in trade. But even after such a strong movement down, even though some people might have come back to purchase this down, thinking that yesterday's market was closing at a day high and this is a minor pullback, they have not been able to push the prices above this candle for now 10 minutes. Uh, One can argue both ways, but the preference is for still to be considering this as a bearish structure within the context of where we are. So now it hits our entry, and we have a strong bar, and we also have oversold bar. So at this point of time, what we'll try and do is we'll try and figure out where should we place our stop loss. Or I mean, in non-trailing method, we would have still kept it at day high, but as this structure has developed, it gives us a potential place to keep our close basis stop loss somewhere here. uh, then the market kind of makes an inside bar. There is a lot of buying that comes in. Still our thinking remains the same, that even after all of that, they weren't able to take out the high of this bearish bar, but obviously market can reverse at any moment. It continues to trend higher, it continues to trend higher. Now we have a bar which touches it but still does not close it, so we wait. uh, and now we have another bar. So this is yet another addition to the way that we are trying to understand the structure. So this we will consider to be a 3 bar drive. This is what I've observed is this is somewhat of a uncommon structure and typically signals a reversal where we have 3 candles in the same direction with each of the candles kind of closing above the high, or even in reverse the reverse will be true, but this candle closes above the high, this candle closes above the high, this low is above this low, this low is above this low. So what we have seen is that once we have another bar created, so this whole structure, this $3.75, our idea would be to go for this one. So we would try and sell below either the low of this bar or low of this bar, with a target of this complete structure. However, at this point in time, we are already in trade, so probably we would not have taken, but obviously we'll continue to tabulate the performance of this. But our belief is that the market should come and trace back somewhere here. This is pretty close to this low, so maybe that low also gets taken out. Neither of that happens. The market continues to build. So our structure of the drive is still intact with some particular low here, but now further reversals would not be caught because that's not how the code has been written. But at this point in time, what we also see is that our close based stop loss, we have a hit above that. So now we move it above this one, we convert it into a touch based stop loss, and also take the opportunity to move the breakout level somewhere here. Then, yeah, we continue to have, we essentially hit our stop loss, so we are out of this trade. So pretty bad trade. Again, we have to evaluate when does the the breakout works. Probably the only thing is in this particular case, this was opposed to all the 3 super trends, and typically we have seen that the best way it works is that if the breakout is in the same direction, so probably that is something to be kept in mind. But yeah, that's all in hindsight. Now we have our X structure coming here. So this still is about, I would say, 3 points. So our preferred trade will be to sell it below this for 3 points, because now it's like a full drive. Now that happens, the market goes and now creates an breakout on the other side. So the other piece of interest comes into picture, that now we have an overbought scandal. So that probably is not that good a news, just from a perspective of whether there will be a pullback or not. And at this point, the market has gone back and then come in. So still we'll continue to trade with our system because we haven't been able to figure out what's the right pullback strategy. This is still, this breakout is before 1. So in the first half of the day, proper structure, all of that. So again, we add about $1. We'll say that we will go long above this point. Okay, so then we get fill, we get a strong candle, we are in trade. So at this point in time, while we had started, we would have kept our stop loss, mental stop loss somewhere here, Now we have two overbought candles, so following the n minus 1 rule, we'll continue to keep our close basis stop loss somewhere here. Okay, then yeah, market comes back, tries to sweep something, still closes in red, not a very good sign. Comes back again, has a strong bearish bar, take some pause at the earlier breakout level. At this point in time, definitely our new breakout level has moved here. So this is now the day high level. We'll continue to keep this one on the chart for some time till we see how the market is behaving. Market pushes off from here, still okay, then comes back, not a very good sign again, and but this time also it has kind of closed below this, continues, okay, then pushes off from here, uh, completely choppy, not able to do anything away from the this particular level. uh, we continue to be in the trade, no other option, moves away, moves away. So now we potentially, we'll see how the next performs, but this also is kind of a three bar drive structure. So like I said, that happens. If we were not in the long trade, we would have tried to sell below this. This total structure was about 4 points. So our view would have been, let's say, the 4 points here, but this 4 point takes us away from the complete body of the drive, so we would have truncated our target to here. So this would have been like for a small scalp of about $3. None of that happens. Okay, we fill in. Ideally, while we did not move it, but and maybe we are still somewhere here, but ideally, if once the drive setup is there, if there is a close beyond the point of the drive, then we actually don't trade it. So potentially we'll not have this trade. It continues, and it pushes off again. uh, Very bad structure from a perspective of psychology. There would have been a lot of panic that I would have gone through here. You know, at this point in time, probably we can move our trailing SL here. But again, like, yeah, pretty bad. Again, a particular drive, we expect a pullback. So with that happens, if we were not in the trade, then our view would have been to go for this $3 cal. This is pretty neat from a structure perspective because it is not going beyond this one and so on. But again, we are in the long trade, but let's just see whether the scalp works. So we would have been in tree, and then our stop loss for this scalp would have been here, and the stop loss would have been taken out. So obviously this didn't work. So good insight, and we'll continue to have this as a part of our backtesting result. Probably we need to have the other filter where once there is a low, then there is a kind of a close beyond that. But we'll see. Right now we are not trading it, so we'll continue to keep this as a loss trade. We are continuing to move away from this one. Yeah, I mean, see, like, we would have hit our target of this particular drive, but there's no way of, yeah, no way of kind of not being in that trade. The only point was that no point, right? I mean, yeah, so there is no way that we would have been in this trade, but any which way, so that's exactly what happens after these two bars. Okay, Now the question is, at this point in time, no, we would not have probably moved our stop loss. Um, Remains to be a question. So now we have a close. So we made losses in the on the short side, and now we are very close to make a loss on the long side as well. So we make it a touch based stop loss, and yeah, we make a loss here as well. God knows how we would have been able to manage that. Again, like I said, right, this one we were feeling confident because it did not come with a pullback. This one they are saying that did come with a pullback, but looks like a liquidity sweep, but we got chopped out on both ends. So at this point in time, the trade that is there in the system is the flip, because with this candle this has flipped, but the flip we trade only when this and the day are aligned. So there is literally no trade that we want to do. What we were looking at this point in time, one, two, three, four, five, there are five continuous red bars. So that is something from a 3 bar setup, it's on an unclean drive. Now we get uh, a pause bar, we get a signal as well. So if you look at this point in time, it's a $4 this one. So we wait for the entry above this and for a $4 upside. We do that probably, yeah, all of that. So got the $4. Uh, the market then reverses. We don't sell below oversold till it is day low, so we can't do anything. Yeah, we are not even trading the ST flip because the shorter term and the day are on the opposite side. But what we will wait for is probably a development of another drive, because we now have two red candles. We have three red candles. So, oh no, actually this one is not a red candle, so can't do anything. Again, a new candle comes, new candle comes, nothing is happening. We are not in trade. Yeah, continue, continue. Yeah, so now we are at this point, and probably there will be a pinch indicator that will come in the next bar, which happens. So when this happens, our trade is again the same. We want a candle to close above this high, which does not happen, and the market just crashes. And now it has crashed below the low of the day till this point in time, with lot of pullback and kind of sweeping it there. This breakout is happening at around 320. So from our approach, we will not take the any breakout that happens in the second half of the day. But still, just for the sake of data capturing and continuing to develop the statistics around the breakout, we'll see what happens at this one, assuming this to be the short entry. Okay, it doesn't fill. At this point in time, we have one, two, three, four, five. Yeah. So this will continue to trade. So this is 7 points. So our approach is that we'll take a positive trade above this. First, can't take for 7 points, so we'll take it till the body of this bar. That's the other trade that we are willing to take. Okay, we are in trade, in trade, in trade. So now at this point in time, because we have a drive and then this one has come, so yeah, probably we would have seen it develop. I don't know. Maybe we would have tried to exit it somewhere here. Um, I'm not sure. Uh, yeah, I'm not sure how we would have exited. Maybe when this was developing, we would have seen it to be developing, and somewhere around the close of the bar, we would have potentially exited. That's the most likely thing. Uh, and because obviously we would have made losses through the day, we would panicking, so all of that. And at this point in time, once this would have been created, our view would have been for this small setup, right? How many points are this? 3 points. So go for 3 points here. So that also would have happened. This is where we have to be a bit more dynamic. That's what I believe. That a drive and tries to pull back, and then it kind of again convert. So here, if we had kind of entered here, then the possibility is higher. So all of that we'll have to see any which ways. So with this, we uh, again break. So like that hypothetical trade at the day low is filled here and also is in some profit, but again we are not in this trade because we don't enter the trade or the breakout which happens after in the second half of the day. Again we have a drive situation, so let's go with the drive. At this point in time, this whole bar is around $4.50, so that's what we'll do. We'll wait for uh, there's no close, so we are still opting for that trade. We are in trade, and there's the $4.50, and yeah, so the target would have been met, so that's good also. uh, then it again reverses. Yeah, that's interesting, right? I mean, while this candle would have been developing, I don't think we would be able to catch it, but it is. So what is very interesting is that once this candle would have closed, and we know that this is a drive, our view should have been that okay, let's just sell below the low of this candle for this point, because this is also a very often occurring structure that it does not give a chance to enter, and it just kind of goes in the direction. So let's see. We'll try and assess that in the live market. 450. Yeah, yeah. If probably we change the code to keep it when we just have the drive without this one, then we'll be more aware. But yeah, in live market it's okay. We'll continue to assess. Interestingly, the short also has worked somewhat, which goes to say, yeah. So pretty, yeah. So the action looks pretty decent in hindsight, but very counter to our trading setups. Therefore, we would not have been able to take the benefit of this at all. Um, yeah, because we don't sell below oversold, given that it's not day low. And while we got the simplest of the instructions where the ST flip happened, but we were not able to take into consideration any of this particular trend while we did some scalps. So that's okay.